Hello, everybody. Welcome to Weekly Market News. Today is Monday, 12th of April, and let's look at the markets, how they were performing for the last few weeks as we didn't see each other because of Easter Monday. So let's look at the Nasdaq and other stock indices in the US where we were able to see some return of positive sentiment, especially for the growth and technological stocks as the yields from U.S. Treasuries retreated and they are somewhat stabilized around 165%, which is 10 basis points lower than when we were for the most of the part of some uncertainty for the markets. You can see the stabilizing of the yields was fairly positive for stocks, not only for technological stocks, but also index S&P 500. Let's look at the S&P 500, who was able to go to another and new record highs, even broke 4,100 points, which is another milestone for S&P 500. So the sentiment on stocks is very positive. We do not see, I mean, me personally, I don't see any systematic risk in the near term for the stocks. Even Jeremy Powell repeated multiple times last week and even on Sunday in the interview for CBS that ultra loose monetary policy is here to stay until the central bank will see some significant improvements, especially in the job markets, where there is still problem with low income people, which are still unemployed. But as the economy reopens, we should see some faster hiring in those areas as the unemployment is significantly lower, but we are still missing somewhat of 9 million jobs in the U.S. economy, which need to be filled before central bank will even think about raising interest rates or doing something with the quantitative easing and the bond purchases. So everything from that perspective should be positive for stocks. We obviously see some significant risk of rising inflation, which can be a problem in the second half of this year. Perhaps after summer, when the vaccination will get to the point where economy will be able to reopen fully in the United States, which will help boost the spending and could ultimately reflect itself in rising prices. So then we might want to see some imbalances in the economy. We will mostly watch the yields from U.S. Treasuries as they will predict the rising inflation and even the numbers, the real hard data of inflation, which will, by the way, be released on Tuesday this week. So, if I'm not mistaken, on Tuesday, yeah, we have CPI numbers. So we will see if that uptick from 1.5% to 1.7 last month will be reflected even in those numbers for the month of March. So this is some systematic risk right now for the markets, but as like I said before, in the near term we should not see any risks for the current uptrend on the stock markets. We can also look at the earnings whispers and the earnings calendar for this week as we are heading towards the earnings season in the United States, which will be kicked off again by big banks, but I'm not sure if this week is something that we should be focused on. Like I said, we do not have any big numbers yet, but JP Morgan and Chase, Wells Fargo, Goldman Sachs, so those are big numbers. Bank of America, banking sector, like I said, kicks off the earnings season. So Let's look at there. We will see most of these stocks are at record highs right now, so it will be tough for them to beat any very positive expectation over there, and so we could see some even steeper rise of these stocks. So let's see how this thing will play out. As you can see, most of them are scheduled on Wednesday, also on Thursday, on Friday. We should have some earnings as well. Morgan Stanley is going to report their earnings for first quarter. So first quarter will be interesting, as we were able to see some of the resurgence of the virus around the world. Anyway, meanwhile, the stocks are keep on rising, and the positive sentiment is back. Obviously, it's not a good thing for U.S. dollar, which is also under pressure from rising yields. And you can see euro was able to go above 119. Not really hold these gains above this level, but you can see some lower highs. I mean, higher highs, also lower lows. So we are preparing for some big actions. Also, the market is right now in the area of previous consolidation, where we can see again some sideways price action. So we will see how we will perform this week. But me personally, I do not expect any further gains, huge gains above 120 this week. I can see Euro USD to go sideways for most of the time, even with a little bit of gains go above 119. We will see if there's any positive sentiment from a lower dollar, slightly weaker, and even especially the weaker and lower yields from U.S. Treasuries. GBPUSD is going a little bit better than Euro, especially at the beginning of this week. Last week was fairly negative, mainly because of AstraZeneca and the fears about the vaccine. That is being banned by several countries, but UK especially is relying on those vaccines a lot. So this will fundamentally have some impact on the performance of GBP. So we'll see if this week will really be something of more of a performance of Euro, which was able to take advantage of lower dollar and rise to higher levels, where it's something bounced from the previous low, something that we can expect here from GBP this week. So I would expect some further gains, not really huge gains, as the sentiment and the fundament is fairly negative still, but we can see some gains here, I believe. So that's about GBP. Other currency pairs are mostly influenced by US dollar as well. Australian dollar, but going sideways for most of the part. USDCAD also going sideways last week. It was also for a third week in a row going sideways, not really having any significant area of further performances. Also, oil is going sideways for most of the time. So, like I said, we do not have any huge fundamental impacts that could set the tone for another month. As the only thing on the Canadian dollar is employment data from Canada, which played out to be extremely positive. So job market is going back to where it was before the pandemic, and obviously this helps the Canadian dollar. But the Canadian dollar also needs some boost from prices of oil, which are under a little bit of pressure, as the demand and especially the short-term near outlook for demand is quite negative. With the OPEC planning to ramp up production, so sending another 1 million barrels through July for the markets, and it can possibly be in a near-term negative with the demand outlook that is not looking that good, as there are still several countries and several areas on the world that are experiencing some rising cases and probably extended lockdowns. So oil is going sideways, very not really surprisingly, and it can even go to lower levels a little bit, but some further rise we do not really see. We would have to see some external impacts on the market and maybe change of production policy. But like I said, OPEC is right now planning to ramp up the production from the next month, and with the rising cases around the world, it can be a problem for the demand especially in the short-term outlook. On the long term, we expect the economy to go back to where it was, and oil should and other commodities as well should follow the lead, and we should probably see some rise in prices of oil in the rest of the year. And other commodities, gold was very positive last week, as it took advantage of especially lower yields, as the higher yields are obviously not so good for oil, for gold, and obviously those lower yields are positive for it, and even a weaker dollar. But I do not personally expect anything here from gold. I think it's going to remain somewhat of a weaker in those descending channel, and probably we'll have to look for some price action to get into the downtrend here from the end of the last year. But speaking of the most important thing here, which is probably inflation outlook, we probably could see some inflation, rising inflation in perhaps the second half of this year. But until then, don't really see any rising outlook and any outlook for rising prices here on the market of gold. So this will be it for the market. Let's look at the economic calendar. Like I said, the most important thing here is CPI data from US on Tuesday. On Wednesday, we have do we have something interesting? Christian Lagarde's speech, stocks exchange of oil. Jeremy Powell has a speech on Wednesday. On Thursday, we have employment data from Australia, retail sales data from USA, claims from USA. Nothing really that interesting. GDP data for first quarter on Friday from China, several other data from China, and housing data from USA. So we will kick off this week with not so many interesting macro data, but definitely can impact the performance of the markets this week. And like I said, obviously also the earnings season kicks off this week as well. So this will be it for today's video. If you guys have any question, leave it down in the comment section below the video, and I will see you next week.